Thank you. Members of the public wishing to participate in this meeting must use their full name for Zoom access. If full names are not used, people will not be allowed to participate in the discussion. The town reserves the right to remove any member of the public from the meeting who doesn't use their full name or acts inappropriately. As a preliminary matter, this is Brian Sullivan of the Affordable Housing Trust. Permit me to confirm that all members and persons anticipated on the agenda are present and can hear me. Members, when I call your name, please respond in the affirmative. Dave Iverson.
Here.
Rima Sherry.
Here.
Meg Browers.
Here.
Penny Dye.
Here.
Brooke Moore.
Here.
Shanta Murphy.
Here.
Thank you. Staff, when I call your name, please respond in the affirmative. Tucker Holland.
Here.
And Haley Cook.
Here.
Anticipated speakers. I don't know that we necessarily have any. I'll skip that section. Good morning. This is an open meeting of the Affordable Housing Trust being conducted remotely pursuant to Chapter 20 of the Acts of 2021. Ensuring public access does not ensure public participation unless such participation is required by law. This meeting will feature public comment. For this meeting, the Affordable Housing Trust is convening via video conference via the Zoom map as posted on the town's website, identifying how the public may join. Please note that this meeting is being recorded and all attendees are participating via video conference. Accordingly, please be aware that other folks may be able to see you and take care not to screen share your computer. Anything you broadcast may not be captured by, or may be captured by the recording. All supporting materials that have been provided to members of this body are available on the town's website unless otherwise noted. The public is encouraged to follow along using posted agenda unless otherwise noted. We will turn to the first item on the agenda, but before we do so, permit me to cover ground rules for an effective and clear conduct of our business to ensure accurate meeting minutes. The chair will introduce each speaker on the agenda. After they conclude their remarks, go down the line of members, inviting each by name to provide comment, questions, or motions. Hold until your name is called. Remember to mute your phone or your computer when you're not speaking. Please remember to speak clearly in a way that helps generate accurate meeting minutes. For any response, please wait till the chair yields the floor to you. State your name before speaking. If members wish to engage in a conversation with other members, please do so through the chair taking care to identify yourself. For public comment, after members have spoken, the chair will afford public comment to those members of the public that have joined the meeting via Zoom. Members of the public who wish to speak must state their names and be acknowledged and speak through the chair. Finally, each vote will be taken in this meeting will be conducted by roll call. And with that, we'll move on to the agenda.
Brian?
Yes.
Yes, I'll make a motion to approve the agenda with one minor modification.
Okay.
Number 6, it refers to the HDC application process. I think it's supposed to be DHCD.
Actually, it was intended to be HDC.
Oh, really?
Well,
Why are they involved in the year-round deed restriction process?
so let's leave it at that. We'll come to it and I'll introduce the idea in the order on the agenda.
Okay, I'll make a motion to approve the agenda as written.
Is there a second?
Second.
Second from Rima by roll call. Dave Iverson,
Aye.
Rima Sherry,
Aye.
Meg Browers,
Aye.
Penny Dye,
Aye.
Brooke Moore,
Aye.
Shanta Murphy.
Aye.
And Brian Sullivan's an aye. Okay, so then we go to minutes for approval of the minutes from March 7th. Are there any edits, changes, comments on the minutes from March 7th? Seeing none, is there a motion?
So moved to approve.
Great. I'm going to abstain from this vote. Looks like I wasn't there. Is that right? So second from Shanta. Dave Iverson.
Aye.
Rima Sherry.
Aye.
Meg Browers.
Aye.
Penny Dye.
Aye.
Brooke Moore.
Aye.
Shanta Murphy.
Aye.
And I will abstain. With that, we move to public comment. We have a handful of members of the public. Does anybody? Tucker, you have a comment as a member of the public?
Thank you, Mr. Chair. Yeah, it's not a formal agenda item, but I guess I wanted to take the opportunity on the record to thank James Kenley of the Vail Symposium and Bobby Lipnick for inviting us to be a part of their recent conversation on housing. It was a terrific experience, a lot of shared learning, introduction to some folks actually who I would like to bring here at one point, who I think can bring ideas and perspective that would benefit our efforts. So I, again, just wanted to formally thank the Vail Symposium.
Tucker, are there slides from that event and or video that you could provide to Haley to circulate to the members and potentially Florencia to post on the website if you would find it beneficial?
There definitely is a link to the video, and I will have Haley do that.
Great, thank you. Anybody have any questions about that event for Tucker or?
Yeah, I have a question through you, Mr. Chair.
Please.
To Tucker. Is there anything that really stood out that's being done in other communities that you thought would have a good application here?
Well, I said to George Ruther, who's the housing director in Vail, that, you know, Nantucket will have its own version of the Vail Indeed program, you know, within the next 12 months. That's a program that they, you know, they're still maybe making some refinements to, but, you know, during the course of the discussion, the moderator, Chris Romer, who's head of their Chamber of Commerce, had asked folks, you know, what do each of us admire about other communities in terms of what they're doing for housing? And with the Vail Indeed program, they didn't let the perfect get in the way of the good. And I think they've been able to create 400 year-round, really employment-oriented deed restricted properties in a 4-year time frame here. They're looking to create 1,000 over 10 years, so they're on pace. And again, George might say they're still working out one or two aspects of it. As people obviously use it, you learn things, but I think it is a tremendous success, and we want to have something in that vein here in Nantucket. It's a little more challenging for us presently because we don't have condo product, which Vail obviously has a lot of, and that's that facilitates their being able to implement this. I think of the 400 units, 399 are condominiums and 1 is a single family residence. But we can adapt what they've done here.
Thanks. And just how many condo units are there going to be at Surfside Crossing?
156.
Thank you.
Dave?
Through you to Tucker, if I could. So Tucker, what's their process in securing that? Are they paying for a deed restriction, and what does that look like? Is it a percentage of the worth of the property, and what's their percentage?
Yeah, so great questions, Dave. So they have determined that the value of the deed restriction is roughly 15 to 20% of the unit market value. So they're paying approximately $75,000 to deed restrict a $500,000 condominium.
And do you, Sully, think that that's an accurate percentage, or do you think that we'll be paying more?
So I think that that's probably an accurate percentage for a window of the market. So the window of the market, if market value fell between $1.5 million and $3 million, which is where the beginning of the market kind of is now, I think that that's appropriate window. I think that we'll probably get priced out of the marketplace above $3 million the way it sits today.
But wait, I mean, are we looking to deed restrict $3 million properties?
I see people
I think
buying.
there's some out.
I see people buying $3 million properties now for employee housing. And so that could be an interesting opportunity.
Thank you guys for all the answers. It's very exciting. I can't wait to see it implemented.
Okay, so we'll look forward to those slides. Maybe we can get those out in the public, Brooke. You?
And our being able to do that is contingent on the legislation, right, that's pending in Boston about adding a year-round restriction to state law, correct, Tucker?
I think it's kind of a flip-flop answer. Like if we want to have one that's specifically a free market year-round restriction, the answer would be yes, Brooke.
Yeah.
But if we move from 175% AMI to 240 at this year's town meeting, then we could create the restriction up to 240, which would put homes, I believe, Tucker, I don't have the math in front of me, in that $3 million category into this conversation. There would be I guess I'm not sure how we would qualify the lottery process or whatever how that affordability component would work, but I don't think it's restricted on that legislation. If I'm
Right. My understanding is if we want no income or resale restriction and just a employment and occupancy restriction, that depends on the state law being amended and our then adopting a definition in local code at potentially the fall town meeting. Those two things have to happen. But if we put an income cap on it, then it's the matter of whether it can be held in perpetuity or not. At the current time, something without an income restriction has a maximum of, there's people who believe legally it can max out at 30 years. So, but if we do an income restriction, then we can do in perpetuity now. So it's not that we can't start it, but would have different criteria if we did it now versus when all of that legislative and bylaw stuff gets sorted out.
My understanding is congruent with yours. Tucker?
Yeah, I was going to say that, Vicky is away this week, but, we'll have her speak to this specifically at the next meeting.
Anybody else on this or any other public comment opportunity? Seeing no action, I'll close public comment and come to item 5, the Advocacy Day in Boston to support Housing Bank Bill transfer fee.
Yes, thank you, Mr. Chair. So we have a good contingent of folks from Nantucket headed up to the State House this Thursday morning, many of the folks on this call. And we will be leaving the island on the 740 ferry, being picked up by 2 buses or large vans in Hyannis and taken up to the State House, where the group will break down into smaller units, making visits to individual legislative representative offices, and then reconvening with our Martha's Vineyard counterparts. And there are roughly 250 folks coming up from the vineyard on the steps of the State House, either indoor or outdoor, depending on the rain situation up there on Thursday. But we will be convening with them for a rally / press event where Senator Sear and Representative Fernandez will make remarks, in addition to 5 folks from across the 2 islands. And then both groups will be returning to their respective islands immediately following that. And the plan is to catch the 305 boat back to the island. There has been brought to our attention the newly started work on the Sagamore Bridge, which is potentially going to have an influence on whether we are able to make that 305 boat. So Haley is sending out an email this afternoon, to all of the folks who have signed up and so forth, letting them know more of the details of the day, and also alerting them that there is the possibility that we may have to catch the later boat. And the High Line is fully aware of our schedule and activities, and is planning for us in effect for either scenario. So if we do end up with a longer day, we will be providing some pizza in Hyannis before folks head back. And actually, Haley, if you wanted to hold up one of the t-shirts from the vineyard, folks can get a look at the dress wear for Thursday.
Oh, cool. I didn't know we had uniforms.
Oh,
Please
yeah.
hold. 1 second.
So are there any questions about the program?
I just want to know on day 2, what is the average delay at the bridge?
Woohoo.
Oh, here it is.
Swag.
Yeah.
Swag. Swag. If you will.
Outstanding.
Seeing no questions, that's a thumbs up. Great, awesome. We'll close that and move on to not the DHCD item. So some time ago, so I'm going to open item 6, the year-round deed restricted HDC application process. So it may not have meant to say year-round deed restricted, but it maybe income restricted, or the reason this is on there is over the past couple of years, I've talked to a number of people who are working to build covenant homes and working with modular companies. And at the time, the HDC had a very significant backlog of applications. And people's timing was getting bumped into, with the closeout of barging and summer trucks, to a future season as they were waiting through the process at the HDC to get their turn. Thus, going to the old adage, time is money. It may cost them a summer seasonal rental if they miss the closed barging window. So the reason I mentioned this to Haley to put it on the menu or on the agenda was, is there an opportunity for us to come up with some ideas that we could present to the HDC and say, is there an opportunity for AMI restricted units to jump to the front of the line? How do we speed up the application process for these homes to try and keep costs down for the people that are trying to build them? And whether it's Homes Housing Nantucket's working on, or Habitat, or Covenant Houses, or something along lines. So that was kind of the birth of this idea. Could we put a sheet together, send it over, so maybe that there's a, in the HDC application, you check a box that you have an AMI restricted unit, and then you have some opportunity to be seen faster in the process because time is money. So that was my thought on bringing this to the table. Brooke. And that's the extent of my presentation about this.
I love it. And the HDC is about to procure a vendor to review their procedures and processes. Now, whether we could get this done before that happens, or as a way of operating, or a request to the HDC and the Plus department, I think it's certainly worth maybe outreach to the department to ask how we might formally make this request, and how to have a conversation about it.
I'm happy to make that call.
Thank you, Dave.
Yeah.
Penny?
Yeah, I completely support the idea in theory, but I think our first stop is to get a legal opinion on this.
Great.
Maybe Dave could do that when he's making his call.
I know that HDC has been really great, like in the process of reviewing Wiggles Way and making sure that the projects we've brought forward have attention and have thoughtful, fast discussion. I don't know what the experience is of a private non-for-profit group like Housing Nantucket, or a private individuals. The instances I've had conversations were private individuals and just kind of waiting it out. So I don't know what that looks like. And I'd be curious.
Andrew might have some insight in the discussion I have with him, and then if he thinks we need to get some legal advice, then I guess I'll give Brooke a call and see if she can make that happen.
And then to that point, I don't know if there's any way in the design process that can help with the affordability of some of these structures in staying consistent with building with Nantucket in mind, but material choices or selections or things that are more affordable options for people as construction costs continue to rise. That would be a continuation, Dave, as you're having that conversation.
Okay.
Rima?
Through you, well, to you, modulars, probably could be looked at systematically because, you know, they don't have a lot of special details a lot of times, you know, especially if we're trying to do it affordably. So possibly we could ask that a modular unit that sort of conforms to the basics can go through staff review first with a recommendation to the committee, and maybe that could move things along faster.
Yeah, they could consent, maybe consent. And I know when I did my daughters, it was on the consent agenda. It
Yeah,
just-
if we
Oh,
could-
okay, great. That's great to know, Dave.
Yeah.
Cool.
Mr. Cassidy? Bill, you're on mute. Your hand was up and now down, but I can't hear you.
I'm sorry. I pushed the wrong button. Through you, Mr. Chair, I would humbly suggest, David, maybe prior to talking to Andrew, speak to Steve Welch. Steve has
Okay.
been very, very active in trying to rethink the process. And I think that the two of them could really work well together.
That is a brilliant suggestion, Billy. I agree 100%. Yeah.
Okay, cool. So Dave, thank you. Look forward to letting us know how we can help you move forward that part, and we'll talk about it when it's ready next.
All right. I will keep you apprised.
Item 7, communications plan for town meeting discussion, housing, real estate, newsletter content. So Haley, come to you.
Okay, so this item, I think there might be more to it, but I'm going to start with my section of it, which is the bullet point of the housing and real estate newsletter content. I spoke to Tucker earlier this week a little bit about the goals moving forward in terms of before the town meeting and then eventually the ballot measure with the $6.5 million override. So I'll have a little bit in there, a blurb about that and why it is that the AHT needs more funding and what they're going to do with it and all of that. And I'll link some helpful articles as well for folks who do want to read further. And then I also will be including other news from the housing office. So I'll talk a little bit about Tucker being in Vail. I will give an update on Wiggles Way. I'll probably want to connect with Ann Kutzpa, who I know is on this call, but I can do an updated photo and talk about the housing opportunities there. I'm going to do an update on closing cost assistance that we provided since our last newsletter. And then I'll do a blurb on Advocacy Day because this newsletter will come out, I think April 12th is the date. So Advocacy Day will have passed. So we'll have photos and a synopsis of that. And I just wanted to take a moment to ask the trust if there is anything else that you would like me to communicate in this newsletter, whether it be specific to before town meeting or other items that you might have.
Rima?
Through you, Brian, should we include the Dr. Dickler Award? We might want to get the word out for nominations around now.
I think that's a great idea. So my
Yep, I
question
can do that.
to Anne for you, Haley, Anne, is April 12th too early to identify a future application date for Wiggles Way?
Oh, yes. I mean, yep. We're the building, Ann Cuspa Housing Nantucket. I mean, Billy can talk more about the timeline, but I did a site visit yesterday to Wiggles Way, and that's at 31 Fairgrounds. And the foundation hole for buildings 6 and 7. They're the final, that's the final kind of boxes will be put on there, final buildings. It's dug, but there's still some, from what I could observe, forms that needed to go in and some concrete that needed to get poured. That would need to get set, and then the boxes need to be all set together. So that even hasn't been done. Definitely April is not when you want to tell people to start applying.
No.
Okay.
The risk of telling them too early or even giving them more hope, really, they won't make other arrangements for the summer, or, you know, we want people to secure their housing and not count on this as a viable solution for them. So that's why I think, you know, September really is a more realistic date. I know the builder says it's earlier, but it just impacts the lives of all these more people. So I think we really need to be conservative about releasing that application.
Okay, great. That's a very full question. Your point's well taken that you want to make sure people stay in secured opportunities.
Okay, noted for the newsletter. I will probably just give like an update in terms of look at how far it's come and look how great this looks, and please stay tuned. We will let you know as soon as we know more about this kind of thing.
Thank you, Haley. Brooke?
Do we want to announce the impending RFPs?
Is there any update, Tucker, from the finance department or procurement, or however it's labeled, on where those are at?
Yeah, and that's the same thing I had raised my hand about. I think we do want to talk about them. So Haley, we're going to want to check in with Brian on the timing of that. Brian had communicated earlier that they have lost a couple people in their department. And so he wanted to communicate that they were going to prioritize the order of their release in Orange Street. I said Orange Street was number one on our list, followed closely by Bartlett Road, and then Amelia. But Haley, we should circle back to Brian, obviously in advance of the newsletter, to get his update on when he anticipates those being issued.
And is there any issue announcing them before they're issued? If they're, I don't know if there is or isn't.
I think we can say they're forthcoming. We've talked about them in this public forum many times. Yeah.
Right. Okay. Anyone else? Brooke?
Just for future reference, and time is short this time, but for future ones, it might be nice to have a little section in the newsletter about people who are living in housing that we have supported through the trust. Just success stories. I think it's helpful to let the community know where our support has gone, like for the Habitat homes and for other things. And then Tucker, the other thing is the Waite Drive lots, that we should probably hold that till the procurement process is, because that has to go through procurement as well. Just so you guys know, the select board voted to award 2 lots on Waite Drive, subject to procurement for affordable housing. And we've seen a preliminary design plan from Habitat for 6 units on those, but it does have to go to public procurement before it's awarded to any organization for development. So that's pretty exciting and that is because Habitat has gotten the process set so their units are on the subsidized housing inventory. So.
Thank you, Brooke. Penny?
Yeah, Sally, through you to Tucker, I think it's really important, if this piece is part of our communications plan for town meeting, to in very simple and easy to comprehend terms, identify where the money's gone and where it's going.
Absolutely, Penny, and Haley and I were talking about that as well. So we're going to kind of take the talking points and slides that we had used in the discussion with the finance committee
That's what
that
I was gonna
spe-
suggest.
that
Yeah,
speaks to that and put them in the most user-friendly format.
thank you.
As going back to Brooke's idea about kind of success stories, is it worth in this newsletter to do a success story of the timeline and process of the entire Sachem's Path project? So kind of 12 years, 40 units, a variety of price points, overall price point. Go ahead, Penny.
Of course, I have an opinion about that. I think we need to focus on what we specifically have done and what we're gonna do going forward. I don't think
Okay.
it's constructive to go back. That started, what, 11 years before it got constructed? I don't think that's constructive, sorry.
In on the opposite side of that, Penny, my thought was if it was portrayed in a way that it's now that it is built and serving a great part of our community, it is a very healthy, vibrant, nice community and it's an awesome success story. And it took a long time to get there.
Yeah,
And-
I understand that, but it feels like to me that it could be interpreted as an excuse for how long things are taking. We have other good excuses, not the least of which was a 3-year pandemic.
Fair enough. Tucker, I'll come to you and then to Meg.
Oh, go to Meg first, please.
Meg?
I was just gonna say that maybe if we express the excitement around upcoming projects and then a secondary paragraph sort of being like, we're modeling future projects off the success of, for example, Sachem's Path might be a better like storyline. That doesn't sound like we're so outdated.
We just need to be, excuse me,
Go ahead, Penny.
we need to be careful. That was ownership. And right now, everything that's on our boards is not ownership. I don't want to create false hope for some immediate opportunity that is down the line. Thank you.
Tucker, go ahead.
Well, my thought just, I mean, I think Brooke's idea is great in terms of having examples of folks that we've helped. My thought was simply that, could reach out to Dave Armanetti about, folks maybe who are in Wildflower or the first part of Violet Place, who he thinks, might be folks that would be suitable and interested to have their story told a little bit.
Great. Okay, coming back to the top, any more comments, questions on communications plan at the moment heading into town meeting? Go ahead, Rima.
Sorry. Do we were talking about getting a communications committee meeting together. Is anyone still interested in that, or, are we just going to go on working with staff instead?
So I know that an email came to me with a couple of available dates, and I don't know that I came back to it. I'm all for trying to meet, or a group moving forward and meeting. I don't want to slow it down, but that would
Alright.
be excellent.
Well, maybe we could get together next week sometime.
That sounds great. Brooke?
Tucker, how does that intersect with the public outreach office? Is that a topic we should present so everybody understands what's going on?
Sure. Well, a couple of different things. So one is that we had been informed about subcommittee work. I think we've talked about a little bit here in our meeting that, if 2 or more members are getting together, it needs to be a posted meeting. There need to be minutes and so forth. So it is cumbersome. The second thing here is we had talked about perhaps engaging a third party to assist with some of the communications between here and town meeting, and Florencia had gotten wind of that and said, well, wait a minute, like I really want everything to flow through the communications office for the town. And so we had said, well, all right, if you want to be involved with it, we really should get together right away, and have not heard back from her on scheduling something. The third element, and I was going to address this in the other business section, but Haley is actually going to be leaving the housing office and actually moving to the communications office. And that will take place at the end of next week. So there's some transition going on, and I'm certainly, again, we sent a note out to Florencia and Libby and some others about, hey, we really should have a meeting to talk through the transition and also some of the communications needs that the trust has between now and town meeting. And again, waiting on being able to have that.
Thank you, Tucker. I'm going to come to Haley with her hand up first and then to Penny.
Oh, yes. I was just going to mention, just going back one step, that I can organize that communications subcommittee for sometime next week. I just, Brian, if you want to connect with me on a good time, I'll get that together on Zoom.
Great. Thanks, Haley. Penny, your hand went down. You good? Or
It was a mistake.
okay. Brooke?
If Florencia could join that meeting, 2 birds with 1 stone.
Great. And that needs to be, just remind me, needs to be posted 48 hours before it actually happens, and weekends don't count as time? Okay. All right, we'll work diligently to figure out a open.
Weekends and holidays. The
Yeah.
holidays always got me.
Yeah. Tucker?
Well, so, Mr. Chair, I don't know if it might make sense to suggest having a meeting next Tuesday at our usual 1 o'clock time. One of the things that I was again going to bring up under other business is that Richmond had reached out a day or so ago, not in enough time to have it included on the agenda, regarding the trust consent to an estoppel agreement with regard to their financing for Violet Place. This is with Eastern Bank. So it's more of a perfunctory exercise for us, but it's something that does need to get approved. And Eastern Bank would like to have this done before the end of this month. So if we could find, I said I would see if the trust can, at least a quorum, find a time to meet over the course of the next week. And I'm just suggesting Tuesday as the day that we are in a routine on already. And so that could take place, and members interested to carry on with the communications discussion could stick around for that.
Okay, can, as a group, take a hands up poll whether we could meet next Tuesday, 1 p.m. I got 1 up, 1 down, 2 down, 3 down. Doesn't look like next week's gonna work.
Well, are there other days next week that could work?
I'm not here next week.
Okay, Penny's out
Brooks?
altogether. Brooke?
Yeah, I'm out of the country.
Okay, Dave? I
What
know
was it?
personally, I know I
What was
can't
the
make,
second date again, Brian?
there hasn't been an offer on the second date. It was just next
Okay,
week.
no, I'm the 28th, I am heading back east. So I'll be driving.
I know I can't meet the 29th or the 30th, but I could potentially do Friday, the 31st. Or kick into the following Tuesday, so then it was every 2 week.
It's gonna be difficult for me until probably the 3rd of April to talk. Or to be in a meeting.
So it looks like you got 4 of us out, Tucker, and that would leave one.
Right, so
It looks like we're rolling that to Tuesday, April 4th.
okay, so I'll let Andrew Burek know that so in terms of folks who would be attending the communications meeting, when would that?
So I think that is that group Rima, me, and who else is in that group?
Sean,
And Brooke.
Brooke is not, just Rima Bryan.
Yeah, Brooke just said she's not available next week, so.
So it would really be Tuesday for me, maybe Monday afternoon. If the
So
rest of the group could.
If it's a posted meeting, it could be anybody, anybody who's available, so.
Right. So it has to be posted meeting, and for me personally, Monday afternoon or Tuesday before 3 o'clock.
yeah, either of
Sure.
those works for me. And we could come in person if it's easier just to do it at the office in town.
Yeah, Tuesday would be the better day.
Okay.
On Tuesday, I'm available between 11 and 1, and then my afternoon is bonkers after that.
Can we make it 12 o'clock?
Beautiful.
Okay, so we are still on the community. Go ahead, Haley.
Yeah, just make sure I have this right. 12 o'clock is going to be the communications subcommittee meeting, or is that a regular trust meeting, a special trust meeting?
You can call it a subcommittee meeting because we don't have attendance of the full board.
Okay. But then is it, so then the item that Tucker wants to have on there will not be on there?
That's
because-
correct.
Thank you. Okay.
Any more on communications plan? See what comes out of that committee meeting. Seeing none, I'll close item 7. We'll jump to 8, down payment assistance program. And I'm going to throw to Brooke.
Sure. Sorry for the late notice. I don't know whether Haley sent out, I think just yesterday, sort of a brain dump from conversations I've been having with Ann, Cuspa, Beth Ann, and others, just in terms of what are the things that we would need to consider if we wanted to craft a down payment assistance program for Nantucket. How do we define it? What is its purpose? And how might it function? So I'm just going to start. And these are sort of things that we would have to agree on. I'm not saying these are, set in stone, but this is kind of how I've been thinking about it. And different communities do it in different ways and they call it the same thing. So here's where I'm coming from, subject to our conversation and subsequent agreement if we're going to move forward on this. So I define the purpose is to provide secondary gap financing for qualified purchase of deed restricted affordable housing units on Nantucket. So to flesh out that definition, or how I think of that definition, is we've got a buyer who has to come up with a 10% down payment on a $700,000 175% or AMI unit or a covenant house. And that is $70,000 they have to come up with for their down payment. And they may or may not have been able to save or get access to that level of money for a down payment. So this would make acquiring deed restricted properties more accessible to people who, in my mind, the folks I'm thinking of, it's people who are paying extraordinary rents. It's really hard to save, and who we don't want to deplete all of their liquid assets and make homeownership, make them so house poor that they can't really afford to own and maintain these homes that we've invested in as a community. So that's kind of my rationale. So the funding source would be the Nantucket Affordable Housing Trust. And it is my understanding that we cannot use any of our borrowing authorizations for a program like this. So it would be raise and appropriate tax levied funds that we would use. So for now, our current funding streams are the $2 million housing budget, of which 350,000 or so is supporting a debt borrowing that we made, and there's $1.6 million. We fund our overhead of running the housing office, salaries, programming, et cetera, some of our existing programming. And so for now, with the funding streams we have, the money would likely have to come out of that. Not CPC, obviously, because it's restricted to 80% AMI, and the CPC money we have is targeted toward housing developments that we have in process. As I've talked it through, just obviously subject to everybody's thoughts, I was thinking, all right, so if a 10% down payment on a 700,000 unit is $700,000 unit is 70,000, that really, if we did a dollar for dollar match, so that the buyer would have to produce $1 for every dollar that this program provided, up to a maximum from the program of $40,000, that would get them to a maximum of an 80% down payment. And we could put a cap on no more than X percent of the down payment. As a further restriction, there's lots of things you can do in here to say, and to me, the argument here is balancing the buyers having skin in the game, as it were, in the down payment versus the community. And the optics of that, making sure that, and I've heard from folks that these are already deed restricted units that have community investment. So we want to make sure that what we do makes sense in the context of an already subsidized unit, that this is an additional subsidy, and so that the homeowner really having at least the same contribution as the trust in that down payment. And we could do 2-for-1, that the homeowner has to supply $2 for every dollar. I mean, we can play around with these as we think about how we might put this together. The other thing that I thought about was, and this is also from conversations, is, you have people who have more significant assets in the bank than others. Who are we rewarding in this process? Just optically, someone who's saved more than enough for a down payment and doesn't need this assistance, versus someone who's been unable for whatever reasons to save as much. Just thinking about that optically. And then in order to make it more financially viable for the trust, the town, et cetera, that we would impose an interest rate on this. And I asked Beth Ann to be here today because I did not have the answer to the question, if we put an interest rate in place, how might that work with loan to value ratio for a buyer if they were expected to service the interest immediately as part of their loan and have the principal paid on resale, or whether we delay and accumulate the interest and have it all due as a balloon payment upon resale, and how that might work in terms of their ability to secure their primary mortgage. But we would be recouping some of the cost of money over time, which we don't do with the current down payment assistance program. So the dollar we get back in 10 years is worth less in the market than it was when we issued down payment assistance. And then, repayment terms would be upon sale or transfer of the property. A non-cash out refinance would not trigger repayment, but a cash out refinance would trigger repayment, for instance. Then that's something I'm adding as we're talking that's not in the document. So things to consider are what interest rate, this amortization question, and I think I've really, and then the other thing that I'm not clear on is when we have a lottery allocated unit. So the lottery's done, there's a prioritization list, right? They're ranked people. They have, from the point at which they are chosen as number one, to go through the banking process, secure their down payment, their financing, and then we find out right up against the closing whether or not they have everything in place. And so if this program is part of it, what is the timing in terms of applying for people who win lotteries versus like independent sales of other deed restricted units on resale or covenant programs, covenant sales. And then, obviously we would need someone to vet and review the application for, like we do with closing cost assistance. So, I'll leave it at that. I want to, give Beth Ann an opportunity while she's here so we don't consume too much of our time, maybe, Mr. Chair, to weigh in on the mortgage question first.
Great. Thank you, Brooke. Beth Ann?
Yeah, good afternoon, everybody. Pleasure to be here today. Thank you all for your hard work. You're an amazing team. And to get to your questions, Brooke, when Brooke and I were discussing DAP programs, and Tucker and I, we've been talking about DAP programs probably, I don't know, the last 10 years. There are a number of ways to put them together. And the ones that I like the most are the ones that are presented in the most simple terms to the borrower so they can understand, how they work. That being said, the best example I could show you right now is what Mass Housing Finance did most recently with their Mass Dreams down payment program, where they offered it to communities on the Cape. They did not offer it to Nantucket because they didn't consider us a disproportionately affected community, which was really frustrating. Their DAP program did not require any repayment at all. So they set a dollar amount, like somewhere between $35,000 if you were above 100% AMI, 80% AMI, like up to 100% AMI. And if you were 80% AMI and under, it was like up to $50,000. So just one lump sum, $50,000. And that was to be used towards your down payment and your closing costs. So you wouldn't have to have two programs running at the same time, like a DAP application and process, and then a separate closing cost assistance program, like you guys already have in place that works so well. So I love the Mass Dreams program because it was just one-stop shopping. They didn't go into the criteria of who had assets in the bank that didn't need the program and who did. They didn't have a dollar for dollar match. They didn't have an interest rate. They didn't have an interest only repayment restriction or anything. And I know this is probably maybe getting way too flexible beyond Affordable Housing Trust, more limited funds and wanting to recycle those funds. But I can just tell you from a borrower perspective and a lender perspective, it is the most ideal way to proceed, because what happens is when you have that number one lottery applicant being awarded the house, they've been pre-approved for a mortgage. But I can tell you what I've been doing with previous lottery applicants, from Satcham's Pathway back to most recently with Sandpiper Place, is I take a look at borrowers' credit scores, figure out if they're going to be able to secure a mortgage within the next year. Some of them have bankruptcies, foreclosures. They need a 7-year waiting period, so they're maybe out of the running. But if they're within striking distance of the right FICO score, move ahead to debt to income ratios. Do explain to them, hey, it looks like you might be over income. That's not my thing to say. The lottery agent's going to let you know one way or the other. But for a mortgage, you do apply for this mortgage. Then I get to assets. And that's where most people are falling down. Like, they just don't have the funds for the down payment and the closing costs. So I can right ahead and go ahead and assume, yeah, they're going to have their closing cost money from Affordable Housing Trust Fund because this is a deed restricted property. That's fine, but they don't have the down payment. I don't disqualify their loan at that time. I still give them a pre-approval letter. I give them the option to get in the lottery, because people can then really start to, figure out where it's going to come from. Now, Once they get in process, and I can give you the most recent example right now with a borrower that I did pre-approve exactly that way. FICO score is good, debt to income ratio is fine. He was approved by the lottery agent for not being over income. He is going to need some funds to close. He's saving desperately. He's working on, you know, family member gift funds, that kind of thing. He may still come up short. If right now I could have the same confidence that I have that his down payment was going to be met with a program like this, I could then move ahead from his P&S agreement that's getting signed right now to his financing contingency, which is coming up on May 5th. So because I've got to get in front of an underwriter, and this underwriter, FICO is good, debt to income ratio is good. Where are these funds to close coming from? I just don't see them. Well, here's the closing cost assistance, you know, program. Yep, we've seen that before. That's good. And here is also his approval letter from Affordable Housing Trust Fund that he's applied for, and he's been granted this DAP for the down payment. So that's when the underwriter goes, yep, that's the final piece of the puzzle. That's an acceptable source for the down payment. Here's your mortgage loan commitment letter. You've now met your financing contingency deadline. You know, everybody's happy. So without that approval letter from the Affordable Housing Trust for the funds to close, the loan could get declined. We can't keep moving ahead through the approval process and having a borrower showing up to closing, not having enough money to close. So then you'll say, okay, well, yeah, but then we're going to give them the funds for the down payment, but there is going to be repayment needed. There's going to be a rate. There's going to be even an interest only payment. Well, that now does get tacked onto this borrower's debt to income ratios, which are probably already very tight. And debt to income ratios, we're still looking at a backstop of 43%, especially on deed restricted, especially on first time home buyers, especially on income cap programs, right? You're throwing into that debt to income ratio, principal and interest payment, real estate taxes, homeowners insurance payment. Homeowners insurance is going through the roof these days, not to mention the rising rates, a homeowners association fee. And now you've got this, hopefully they don't have private mortgage insurance. We're doing everything possible to avoid private mortgage insurance. By offering 90% financing with no mortgage insurance as a portfolio loan, we can avoid a mortgage insurance payment for these folks, which they really can't afford. But if you're going to tack on a down payment assistance program, a DAP, second mortgage payment, even if it's an interest only payment, even if it's something small, I have to tell you, it could be a deal breaker with their approval. You know, it's just more debt that they need to overcome with more income. And again, we're restricting income. So it becomes a very fine line. So I think that's why Mass Housing went ahead, because I think they know what I know, which is when you get into underwriting and you're adding more debt onto a borrower, they're no longer qualifying for the mortgage. They're no longer qualifying for the mortgage because they can't afford it debt to income ratio wise, or they need more income to qualify to manage that extra debt. And now they're over income for the property they want to buy. So it honestly is a really fine wire, a fine line. And I understand wanting to recycle funds. I think they would be recycled as a silent second mortgage. Here are the funds. When you do a cash out refi, when you sell the property, these funds will come back to us, in full at that time. So that's kind of where I'm at. I just, the bad news, Brooke, is that yes, this is considered a monthly debt if you're gonna create the note that way.
Thank you, Beth Ann. Brooke?
So Beth Ann, if we imputed an interest rate payable as a balloon on resale, does that have create the same issue?
It does not. I think what you will run into there is, so there are the 80% AMI units in Sachem's Path, and their deed restriction allows appreciation of just 2% a year on value. Okay, if you're tacking on a balloon payment on the end of these notes, by the time they get to resale, they may not have enough equity. I just don't know. You'd have to sit down and do the numbers. They might lose all their equity to your DAP repayment. So be careful with that. Yeah.
Are there other questions for Beth Ann? Penny?
Oh, sorry,
Not so Tucker. Go ahead, Penny.
Okay, not so much for Beth Ann, but more for Brooke. I would just like to see, I'd like to point out two things. This loan would be subordinate to a first mortgage by an institution. So there is some risk involved in this. I am supportive of exploring this further. I also would like to say there needs to be absolutely some sort of local preference, residency, local occupancy, something like that in this program.
Thanks, Penny. Tucker, I'll come to you.
Yeah, thanks, Brian. So Beth Ann, you might know some of the specifics better than I do, but my understanding of the Mass Dreams program is it is targeted to folks that are within what they'd call disproportionately impacted communities. And I guess the question is, to Brooke's point earlier about like, how do we provide something that is needed in a fair manner? So not potentially not harming someone who's been doing the right thing all the way along, who if you call the right thing savings and having the down payment assistance, and weighing that alongside, someone who, has been doing the right thing and truly needs assistance versus someone maybe who has not been doing so much the right thing. That, I think that's where it gets, I'd love to know how you suggest addressing that.
Yeah, Tucker, it's a great question. And I think what Mass Housing did, I'm sure they had this same conversation when they came out with the Mass Dreams program. And I think what ended up being their conclusion, because you can see it in their product matrix for this Mass Dreams product, is I think they ended up saying that is just getting into an area that's just way too subjective. You're going to have people who are making these decisions on, oh, these people have saved so much, they're more worthy of getting this full $50,000 DAP with no repayment involved or whatever than the people who didn't save. You just don't know people's background about why they could or couldn't save while somebody else could. I mean, I won't get into all the details. You guys can conjure up your own scenarios about why one family might have been able to bank that down payment and somebody else wasn't. So I think at the end of the day, was I said, remove the subjective case-by-case review of every applicant, consider all applicants worthy who are purchasing a deed restricted property, who live here year round, local residency preference for sure, of course, who are already vetted with their FICO scores, already vetted with their max income limits. We know we can certainly, everybody's documenting that they're not over income. These people are on a very, very tight budget. And so let's just deem them all worthy and then create the product matrix around that, which, basically I'm looking at it right now, at least one applicant must be a resident of the community. Oh, the other one was with this product, you had to be a first-time home buyer. That was one criteria. So you really had to be a first-time home buyer. You couldn't have owned real estate elsewhere before. And then, yeah, there was just no repayment required. So that's how they went about it. I can tell you, like in the letter that they sent, 79 days later, they were expecting to have this program for 18 months. I mean, it was $40 million. And within 79 days, they ran out of money. And they ended up providing these DAPs to close to 1,000 families. And they said here that we achieved a high degree of success in meeting the program's objectives, such as making loans to large numbers of lower income borrowers and to home buyers of color. And I do think that is what we would see. I mean, that definitely represents the folks that I saw. I forget how many of the pre-approval letters I did for the last Sandpiper lottery, and I sent you guys those numbers. And that was just me, just one little loan officer trying to do as many as I could. That is the profile. They are first-time home buyers. They are, below, area median income, and they are minorities, very much so. So, I think at the end of the day, we just considered them, Mass Housing just considered them all worthy of the program. They found the funds through the state. They got the funds and they quickly allocated them. So it was a really successful program. And You know, when you keep it simple, like I said, it can be a streamlined process for everybody.
Does anyone else have questions? Go ahead, Rima.
Well, it's not a question, a comment through you, Brian, that given the price, you know, the minimal price of a covenant home, $40,000 is probably about half of what they would need for 10%. So, you know, if we limit how much, you know, we're going to be able to kick in, they're going to have their own skin in the game anyway, you know. So it's not like we're just covering all of it. So, you know, I think it sounds good to keep it simple, but you know, adding on a repayment upon sale or cash out refi. So you know, we see money back, but you know, I think keeping it simple. I mean, it's a need. It's been a need for a long time. This is something we've been talking about forever. So if we can swing it, I'm all for it.
Thanks, Rima. Brooke, I might have some new comments. Do you want to address those or?
No, I was just going to quote my friend Tucker that we shouldn't let the perfect get in the way of the good.
So I agree with that. I love the concept of the program. Just some things that I'm thinking about is there an interest rate that we can work with that keeps the value of the money, whatever the value of the money is that we lend out, right? So can we keep up with inflation to some level at the time that it comes back, or is it going to get zeroed out? I worry that we make a unit affordable for somebody who is borderline it's not affordable to them at 43%. The other costs that become available, and then somebody gets into a unit and it becomes unavailable. To Tucker's point, are there other people qualified waiting in the queue who it is more affordable to own a unit, right? Like, will the free market, I guess this is where my mind is going, will the free market of the affordability window house the next household? Does the developer need to come down in price? Does the next household that's more qualified work? Are we helping somebody so borderline we make them in a real challenged housing situation? And I worry that if we're pulling on the levers in a way that it makes it even more challenging for it. So those are kind of some of the things I'm thinking about. I want to see us get to a place of having a down payment assistance. The other comment and thought that I have is, why just have it available to existing deed restricted units? Why not open it up to all housing opportunities? And then if people are willing to accept putting a deed restriction on, then we capture another deed restricted unit. And to the point that Beth Ann made, the state put out a certain amount of money and ran through it quickly. So we're going to have to define a pilot program amount of money. And we're going to see a ton of applications in a very short period of time. So those are my thoughts and comments. I think that this has gotten a lot further. We need to keep pushing it forward. We're getting close to something. But those are just my thoughts and talking points. Dave, then Tucker, or Brooke, do you want to? You had your hand up before. Okay, Dave.
Thank you, Brian. Yeah, I think Beth kind of touched on this a little bit. If we hold repayment till sale, we charge them a nominal interest rate. The concern is that already a lot of these restricted units, they're restricted into what they can sell it at. And when they go to sell it, are they going to owe every penny to us that comes from that sale that's theirs beyond the mortgage, if that makes sense to you? I get concerned, you know, because I'm sure there's a long upside down period until they can actually sell that and repay and still have something to move on with. So that's a concern with the thought of repaying upon sale.
Tucker.
So I think you spoke to this at the end of your remarks, Mr. Chair. Perhaps the start is with the currently restricted units in terms of a pilot program, and it's really the approval of, for example, the $6.5 million funding article at town meeting that would allow us to open the door wider on being able to restrict presently not unrestricted units, because that maybe take more than what it will take. Well, I'm not just going to say maybe, it will take more than what it would take on a 80% restricted unit. So that was my thought on that. I mean, I think we have to think about the repayment aspect. I guess a question that someone from the public would ask is, if we require repayment on closing costs, like, why would we not require repayment on even more substantial assistance? So I think the interest rate is where things get more challenging. But that's one thing we got to think through.
Go ahead, Brooke.
Yeah, I think repayment is without repayment, it's a non-starter for me. I don't see as a cash subsidy. And I want to speak to to a little bit of what Beth Ann alluded to, and I want to use an example, right? So you have a family that was saving, and they had a medical emergency, and their savings account was depleted by a medical emergency. They had been doing the right thing. So I think for us to choose what is the right thing case by case, I think to Beth Ann's point, just open it up to people who have access to an affordable unit, and we see how it goes, and we see and experience whether there are other things we need to think about in terms of further constraining the program or putting different criteria on it. But to Beth Ann's point, and she and I talked about this at length, this sort of medical emergency is that things happen in people's lives where their savings get depleted and they still can afford the home. They just don't have the cash in the bank today to get in the home. And so I would like to get us out of the business of choosing one over the other. And frankly, the lottery system will do a lot of the choosing for us in new units, right? And the first-time homebuyer piece will eliminate people who were able to capture equity from a home off island and bring it to Nantucket, for instance, if they're buying a covenant home. So,
to that point, is it first-time home ownership or is it no home ownership? Because no matter where your asset is or coming from, it feels like to me it's a no home ownership, not a first-time home ownership scenario at the time of the closing. Like if the asset comes from a sale of another house, or it came from a gift from a family member in the form of a trust tax account, I don't know that there's a difference.
So Brian,
Yeah, Penny.
I'd like to suggest that we consider, the land bank has already dealt with a lot of these definitions in their criteria. And their criteria is an individual who's applying for an exemption and never have owned real estate anywhere ever. And I think we ought to maybe, why reinvent it? Just a thought.
I hear where you're coming from, and I don't disagree with that, but I feel like the no home ownership versus the first time home ownership is kind of like the opposite of the person that's having a medical event and the person's that not and saved. So it's same in a choosing scenario. So my recommendation would be to remove that concept to a no existing ownership scenario. But go ahead, Tucker.
Yeah, I mean, I think if I'm understanding you right, Mr. Chair, you know, so I think, are you saying that someone could have owned a home in
Poughkeepsie,
Lebanon,
Illinois,
yeah, Poughkeepsie, New
if
York,
that was a
and
place and sold
yeah,
it
and
for
they sold it, and
$85,000.
they're now here. I mean, I would like to think that we can make room for someone like that. I think it's different. I think if you've been a homeowner on Nantucket, it's slightly different to a homeowner being a homeowner anywhere. But
Well, I think it all comes down to the asset category of
Yep.
the application process, and whether your assets are in a 401k that you can borrow against, or they were in a house that you sold for $126,000 in Poughkeepsie, Illinois. There's no difference in the value of the asset. It's just an asset. It doesn't
Right.
matter whether it's a house or not. I think the thing is, it's about houselessness, right? Like it's a person that doesn't have a home, and how do we provide a home or access to one? That's my opinion. But Penny, give your hand up. Oh, leftover, Brooke.
So again, if we're talking about a pilot, right, we could set it perhaps a little more restrictive and then see what comes, or set it more open and have it more restrictive. I'd be curious, Beth Ann, on this question of the people you've got in the pipeline, have any of them ever owned a home before on the, say, on the Sandpiper? Or were they permitted to apply?
Beth Ann, the floor is yours.
I'm so sorry, my microphone wasn't down. So yeah, so as is true of both Habitat and let's see, and Sandpiper, the day you applied, you were not allowed to own any other real estate anywhere. You didn't. So if you did before, but you sold it and you still weren't over asset, you were okay to proceed with your lottery application and with your Habitat application. And it is true that the Mass Dreams grant was different. They specified first-time home buyers only. And as Penny said, as Land Bank does, they make sure you haven't owned real estate ever before in your lifetime. I don't know how they do it. They find out if people have owned real estate in Canada. I've seen them track down people who have owned a commercial building that had no residential living space at all in it, and that was considered other real estate, and they charged them they didn't waive the first-time home buyer land bank tax. So yeah, Land Bank is very good at tracking down that information. So yeah, there is a difference, and it would have to be, you know, your level of comfort. For Sandpiper, I would tell you across the board, everybody was first-time home buyers. There wasn't a single non first-time home buyer in the mix that I saw. They'd never owned real estate before anywhere.
So I think so there's a difference between the application and the reality of it. And I think I don't want to create a program that is a solution for one situation, which is what this is sounding like. But if someone was able to apply for the housing based on those requirements, they shouldn't be then further filtered by this program, would be my opinion. Even though the reality is they're all first-time home buyers. Like I wouldn't want to create a filter that is not at the top level. Brooke? Well,
and if we're making this available to the Covenant program, we're likely to get people who may have owned a home somewhere else before they moved here. So I'm good with that definition of not owning property, real estate at the time you're getting this loan.
Application.
I mean, yeah, that you apply. Yeah. You can't still own your house in Vermont. Or Poughkeepsie, Illinois.
So I guess the question is, how do you continue moving this along? Is it you take this framework and pass it on to town council to evolve it a little more for us to then pick it apart? What's the action item to make progress here? Go ahead, Brooke.
So I think the questions that we want to answer are people comfortable with the dollar for dollar match? First of all, I mean, we could go through them one by consensus. then we could build a program to be reviewed by town council, I guess is what the process would be. So I would like to have us feel comfortable about some of these parameters that we're setting. And then I think what we have to do is make sure that town council can prepare documentation for closing, to make sure that this, we have everything, all the Ts crosses and Is dotted legally to issue this as a second mortgage, like we do with closing cost assistance. And so does that make sense as a way forward today?
Penny?
Yeah, Brian, to you. I'd like to understand, I guess through you to Tucker, if something like this had already been crafted and was in place today, with the funding that we have available, what would be a responsible cap on a pilot program? If you can answer that, please. You could do like a
So,
range. I mean, you could say
yeah.
$1 million or 500.
Yeah, I mean, so like I would say that we comfortably would have $1 million available to us today that we
And that
could
would-
use toward this purpose.
And at 40,000, that's 25 households that this could help. So, okay, thanks.
So my question through you, Mr. Chair, is are we good with, say, a dollar for dollar match up to $40,000, not to exceed 50% of the down payment? Something like that.
Is there anybody that is not in line with that? Go ahead, Tucker.
Just a question, why do you need that last qualifier?
I guess you don't,
Right,
because it would inherently be 50%.
right.
Yep. Or less. Okay. So dollar for dollar up to $40,000 per acquisition. We're talking about permanently deed restricted housing.
Is there a percentage of AMI we're working with, or are we opening it up to people who aren't deed restricted and are willing to accept a deed restriction? Why not? You're shaking your head vehemently now.
And I'll tell you why not. Because it's a pilot program and we don't have a deed restriction in place for we don't have that program. That part of the thing doesn't exist. The deed restriction already exists for the programs, the properties that we have. We'd be creating a whole different acquisition model and new deed restriction that
Couldn't the deed
that
restriction be the covenant, like the 150% covenant program deed restriction, and we could just raise it up to the max of our allowed amount, 200? Like that deed restriction exists.
So okay, I mean, we're talking about a pilot, put it in the framework of deed restricted properties that already exist. And then as we add other forms of deed restriction, we can put them in the program later, rather than having to wait for those to be done to get going, I guess would be.
So I think, Dave, you were
my thought
shaking
process.
your head, but thank you, Brooke. Dave, you were shaking your head, and Tucker, you have a comment.
I mean, I like the idea of capturing a deed restriction, but I understand Brooke's hesitation, and I think that could be something we could add in after we get this going and just keep it simple, get it moving along, and then start plugging in some other things maybe. I mean, I think this is gonna be hard enough to get off the ground. I don't want to add confusion to it.
Go ahead, Tucker.
I mean, I think it's gonna take more money to buy the deed restriction in addition to sort of providing the down payment assistance. So I definitely think this is the right place to start. I agree with Brian, the chair, on that. Why would we not offer this up to 150? I don't think we should go above 150 until our legislation regarding, codifying our 240 is approved. But I think we could offer the 150.
But aren't some of these units that Beth Ann's trying to solve for up to 175 over in Richmond? So we're already up to 175.
Hmm.
So like, I don't see why we're not just opening it up and not putting a limit on it. It feels too much like trying to create a solution for one scenario that exists today to me, and that I'm not comfortable with in not opening up other opportunities.
Well, obviously we need to get Vicky to weigh in on how much latitude there is right now.
Because the restriction is just a restriction. Like we could take the restriction that they're using or the housing covenant restriction, like there's ways to grab restrictions.
Yeah.
But they don't exist. Go ahead, Brooke.
So all the restrictions we have an income and resale calculation attached to them. So we're asking people to buy into something, a restriction that doesn't exist yet. It doesn't have an affordability. There's no affordability restrictions that exist that calculate resale, that calculate, so that we'd be creating a whole new deed restriction program to capture above anything that's already deed restricted at 175. That's my concern. There's a whole level of paperwork and a formula and all of that has to be worked out in order, because the deed restriction you're talking about doesn't exist. We don't know what it looks like. We don't know what the parameters are of it. I agree at some point we need to do that, but I don't think someone's going to put a deed restriction on $1 million house for a $2 million house for 40 grand. I just don't think I don't think it's even, let's see how many people capture it, you know, at the already deed restricted. I don't know what other people think, but to me, unless I'm wrong, we would have to have a resale formula. What does that look like at 200% AMI or 240? We don't have that.
I believe DHCD does, and that would be the baseline, and it's we just change 150 to 200 in the formula when, like, I think. I don't know. I'll look for other opinions because I've voiced mine. Go ahead, Brooke. Penny.
Yeah, I just think the next step is some sort of legal review. I mean, I don't think this is the venue or the meeting to craft entirely this.
Rima?
Well, would we go to 175 since there are units that are in the pipeline right now at 175?
I believe the original request is inclusive of those 175 units at
Yeah.
Richmond. That's my impression. Brooke, is that correct? Yes, I'm getting an affirmative head shake.
That sounds like a good place to start then.
Go ahead, Brooke.
Mr. Chair, to Penny's point, but we need to give something definitive for legal review. We can't just say craft us we have to agree in principle on some of these things before we go to town council for review. So that's kind of why I wanted to get, so why don't we will ask the question, what more would it take to add anything that's not deed restricted to a program like this? If, you know,
That would be willing
from a
to
legal
accept-
point of view.
That would be willing to accept a deed restriction.
Yeah, what would we need to do that deed restriction?
How do we add, if you accept these funds, how do you add the deed restriction?
Right.
I think we should also get some guidance on how to index the interest rate. I don't want the responsibility for deciding that on an annual basis unless there's an index that it's tied to.
An existing market standard. Brooke?
So let me poll, I'd like to poll the group, having had the conversation and the input from Beth Ann about the impact of interest rate on the resale of some of these homes. Do we want to add the complexity of interest rate, or do we want to accept that this would be like closing cost assistance, maybe without an interest rate I don't think we've really talked about that in terms of what people's preferences are. That would be helpful.
Thank you, Brooke. Penny?
Yeah, just as Brooke pointed out earlier, the dollars at the time that this gets paid back will be worth significantly less than they are when the dollars are lent. I think I'm heavily in favor of some sort of interest rate.
Anyone else? I'm personally interested in the interest rate. I think my also, that's connected to my fear if making it artificially affordable to somebody that it's actually unaffordable to is a fear for me. And the interest rate will help qualify that process a little bit. Rima?
Well, in closing cost assistance, if the profit that they are receiving is less than, paying back the loan, I think we forgive the loan. Isn't that part of what we've set up in closing cost?
I think there's an opportunity for us to forgive the loan, and I would probably want to maintain that.
Okay.
Tucker, then Penny?
Yes, thank you, Mr. Chair. That's correct about closing costs, that there is a provision that gives the board the opportunity to forgive the loan, but there isn't a prescribed path. It's a case by case basis. And I would generally support some kind of interest rate, like to some degree, and Brooke and I talked about this a little bit the other day. Like, I think we want to be the lender of last resort in a sense, and that might help address some of the issues that we've been talking about here.
So I'm hearing the majority of voices in favor of an interest rate. If someone feels differently who hasn't said anything, I'd love to hear that. Your thoughts. To make sure this doesn't hang us up, when we get.
I think Chantal. Yeah, go ahead, Chantal.
I'm a little conflicted on this, admittedly. I understand the arguments for the interest rate, and I agree with it. But at the same time, I'm also concerned that let me choose my words wisely because I'm being recorded. But we're creating opportunities for people who wouldn't usually be able to purchase a home, to be able to do that. And I worry that the interest rate portion of it in the repayment might make it a little difficult. But that, of course, depends on what the interest rate is, I suppose. And as a recent home purchaser in this climate where interest rates are insane, I'm wondering what the thoughts are on that interest rate, or is that something that we have to go to town council and get more information on all of this in general before we can even continue this conversation?
I think Penny's point about interest rates in an index where, like, do you tie it to an annually published January 1st interest rate plus or minus a point? Like, so do you look at CPI and is it neutral, or do you add a point, or do you subtract a point? So there's ways that we are not establishing it, but the market establishes what it is. And then do we make it more affordable by subtracting a point, or is it the Federal Reserve's lending rate? Like, there's a variety of ways to do it, but we're not picking it out of a hat and saying it's 0.75% now until you own the house 50 years from now, kind of a thing. Would be the.
And that's what concerns me, because I worry about folks who, let's say they're buying, now versus people who would be buying next year, borrowing the same amount. They're paying back different amounts, but their financial situation is similar.
I
how do you make it fair and and equitable for all to access these resources in a financial climate like this, I guess is my argument. Which is why I feel so conflicted, because I agree with you guys, there should be an interest rate, but how do we determine what that interest rate is to make it reasonable?
Any, Brooke, I think that gave you a piece of information. Is there any more or? Okay, seeing that.
No,
do you want to do the next
that's
topic?
helpful.
Yeah.
Yeah. And then, hold on, Mike. And then repayment terms, I think we can all concur it's on resale or cash out refund. But not a refinancing, just to get a better interest rate on their mortgage. We would leave it alone. If they were not taking cash out on a refi. Does that feel comfortable for people?
It does, but I'm going to complicate this, and I apologize. But based on Chantel's comment she just made about this interest rate environment, you go out and get a loan at like 6.75%. What's the opportunity to help somebody refinance if rates are lower, if they can't afford to refinance? Like that should be an option or an opportunity more than anything.
So while I understand the reason to capture an interest rate, we're adding complexity. Doing so adds a level of complexity that I think it's the reason Beth Ann's hand is up, that I wonder whether piloting this at $500,000 and seeing how it goes, maybe with no interest attached or, a minimal interest rate, below anything we've ever seen in the mortgage market, even now or to date, to hold a placeholder for it in principle. Because once you add the interest rate, you get to all of these individual circumstances that just make the program more complex to administer.
Okay, Tucker. Tucker, do you want to come off mute?
Yeah, hello. Can you hear me, Mr. Chair?
Yes.
So I was gonna say that I think it would be useful for anyone on the board interested in myself to maybe have some conversation with the finance director on the interest rate point. And ultimately, even though the amount that we're talking about on an individual basis is certainly less than 100,000, much in the same way that we went to the select board before launching the closing cost assistance program to get their thoughts and buy-in. I think we want to be doing that with this, and there may be opinions on the board, about the interest rate component that will be important to consider.
Okay, so that sounds like a opportunity after town council's had a look. Beth Ann, to you.
Thank you. Just to put in just a little bit of recommendation, if you were going to pursue an interest rate, recommendation would be maybe to tie it to, let's say, the 1-year treasury index, and also give a discount from that. So let's call it prime minus 1%. As referenced today, prime rate's at 4.34 today. So prime minus 1, you'd have a rate of 3.3. Even if you had it, the repayment principal and interest due monthly, or even if you said just an interest only due payment on 40,000 due monthly. I don't know who's going to be calculating that in your office, who's going to be receiving payments. That just sounds like a really complicated thing to be collecting on 40,000 times 4 point, let's call it, 40,000 interest only at 3.34%, just to give you an idea. It's a monthly payment, 40,000 times 3.34%, divided by 365 times 31. An IO payment is like, it's like $113 a month. It's going to have an impact on their qualifying for the mortgage, on the debt to income ratios, just to throw that out there. And that's just interest only. And in underwriting, what we're going to do is we're not going to calculate the prevailing interest only payment. In underwriting, we're going to say, what index are you using? And we'll see it in the note that you prepare. It'll say, repayment is due, interest only payments subject to prime rate prevailing, which can change monthly. And I don't know if you're going to have any caps in place, some things are tied to an index and then have caps in place saying that, if this index goes crazy, we promise you it won't exceed 2% annually or 6% lifetime. So you've got a lot to think about with protecting these borrowers from getting into hot water with this payment. And so that's why in underwriting, what we do is, even if you guys say, look, we are going to tie it to an index for an interest rate, we are going to get repaid, it's going to be interest only. What's your index? We're going to add 5% to that. So we're going to say 4.34 plus another 5%, because we don't know where that index is going to go over the life of when this loan has to be repaid. And we have to make sure this borrower can, in the future, carry that based on the prevailing wages. So yeah, I just want to throw all that out there for full disclosure on how we're going to underwrite it on our side, and how you may want to think about how you're going to collect it and process it and monitor it on your end.
Thank you, Beth Ann. Rima? You got to take off mute.
Sorry, it sounds like a balloon is the simplest way to do it, to just not mess with their income debt ratio until they're selling the property.
Thank you, Rima. I got thumbs up from Tucker and Brooke with her hand up.
So I was never contemplating that this would be a floating rate over time. It would be a fixed rate if we were to put interest. Because we really don't have the staff or the expertise to manage $40,000 loans on an ongoing basis. I don't think we can build in ongoing payment. I think it has to be a balloon at resale, and it's a fixed interest rate. And maybe if we were going to do this, if they refinance the mortgage, we would renegotiate the rate at that time, potentially redo our documentation as a possibility. But again, we're adding another level of complexity. I'm sort of leaning toward the no interest direction myself personally.
I'd love to get, to Tucker's point, the opinion of the finance director. Because while we're talking about $40,000 loans, we're talking about a $500,000 pilot program. So we're talking about interest on $500,000, not on $40,000. So while they may be individuals, it'd be interesting to get their, because ultimately that's the office that's going to have to manage it, or the assessor, or whoever your tax payment goes to. Like, there's got to be a mechanism there. So why don't we punt that part of the conversation? I think that there's overall interest in having one, but we may need to repeal it based on the functionality of it. But let's find out what the finance director says in both amount and procedure. Yep, Brooke.
One last idea just popped into my head. What if we went with a lower dollar amount with no interest? Like capped it at 20,000? No?
I don't think that
Okay.
Achieves the.
Yeah, I'm not,
Go ahead, Penny.
I'm just not comfortable with that. I think we have a fiduciary responsibility to this community to get these funds back at some point to help others.
All right. Brooke, does that cover the points that you wanted to get out there? Did we vet that? Not completely, but well?
Yeah, I think Tucker and I can put together, hopefully Tucker will help me put together something to present to Vicky for a first pass for legal. And with that question of, can we extend this above beyond deed restricted units that already exist to add new restrictions, and what would that involve?
Okay, so with that, we'll close down payment assistance program discussion, open other business. Any new other business? Haley,
Yeah, just one item about the meeting, the April 4th, 2023. That's the next meeting I have on schedule for the AHT. It says Zoom. But just so everyone is aware, with open meeting law, remote participation expires March 31st. The House of Representatives have voted on an extension, but we're still waiting on the state Senate and the governor. And so I'm waiting to hear from the admin office on scheduling Zoom meetings. And so that I'm going to schedule things, but there's a possibility that we could run into trouble.
okay, thank you, Haley. Come to Penny.
Yeah, just quickly, I'm gone next week and the week after, and I think I let Tucker know, so.
Okay.
And Tucker.
Yes, Mr. Chair, I mentioned this earlier, that Haley is going to be leaving the housing office, which we're sorry to see her go. We're pleased that she is going to be staying with the town in the communications office. And today will be the last meeting that she is present at least in her current role. And so I just wanted to take the opportunity to thank her for her work on behalf of the trust and the housing office, and wish her well in her new assignment. It will be good to have someone in the communications office who is intimately familiar with our work and shares our cause.
Thank you, Tucker. Yes, Haley, thank you very much.
Thanks, Haley.
Confirm the April 4th appointment or meeting. Board comments, any board comments? Seeing none, close board comments. We'll jump out of here, jump into executive session. I think that link just went around. I'll look for a motion on executive session to consider the purchase, exchange, lease, or real value of property where an open meeting may have a detrimental effect on the negotiating position of a public body. Is there a motion? Motion from Rima and a second
Second,
from Penny, by roll call. Penny Dye,
aye.
Brooke Moore,
Aye.
Rima Sherry,
Aye.
Dave Iverson,
Aye.
Meg Bowers,
Aye.
Chantal Murphy.
Aye.
And Brian Sullivan's an aye. I will be 4 minutes before I'm back in.
All right, thanks, everybody. Gonna sign off and say goodbye.
Thank you.
Thanks,
Beth
Beth Ann.
Ann.
Thank you.
It's great to see you. Keep up the great work. You guys are fantastic. Have a great day. Bye.
Bye.